morning, guys. This is Futures Market Live. My name is Franco, and in this video I will analyze the pre-market, the futures market, and all the components that I use for my trading plan or trading strategy. Right. So let's jump right into it. All right. YouTube. This is not the one that I needed. So there we go. All right, let's start. Like always, I do start on the top down with the daily chart, and I do like particularly the dollar. Right, the dollar is one of the most important chart that I use for my trading strategy. Here we can see how the dollar is in a run up this entire year. Is a very strong asset. Is in an uptrend, and right now we're just retracing from the highs created. Actually, the highs were created in July 14th. I think that's the day the market bottomed. But here's the thing. We are in a very important supply created in 2002. So the dollar is going to stop going up regardless because of that supply. Now situations are different, but nevertheless, those supplies are very important because the dollar dropped quite significantly in the 2000s, right? But that's not as important for me for my day trading strategy. I just want to know how the dollar behave today, right? So I can set up a plan and set up my trades, right? So let's go down to the 30 minutes so we can analyze. And here I had this demand. If you guys saw my video yesterday, I did have this demand here, expecting the dollar to come back down and somehow reacts off of it. This is a very good demand created in the US FX trading session, and then we had a nice run up. This white line represents the resistance, the first resistance for me, right? Yesterday I did have this resistance right here, but it worked partially. I'm gonna mark it off, just be aware. There we go. This circle, I had this resistance, but it was very strong yesterday coming off this demand. And the dollar kept going up. Now, it's very important to understand, right? It's very important to understand the correlations between assets, between the dollar, between the other currencies, between bonds, and so on. So you can plan strategically in your trading. All right, so the situation here is, okay, I did have this demand yesterday, and the dollar came back down, reacted off of it, but finally we violated, and we are back in this demand. Now, if we don't have any changes in the dollar today, I would expect more downside on it, and that will mean more strength in the equity markets. Now, this is very important. This is very important. The dollar is 82% correlated. Sorry, it's 82% inversely correlated to the equity markets. So if we have the dollar in demand and the equity markets in supply, we have to be aware that retracing in the market can happen. Even though if the dollar keeps going down, but what I mean is when both are inversely correlated, one move in a opposite direction, right? So I want to have the dollar in supply when I trade long in the equity markets. I don't want the dollar being here, even though if the equity market keeps going up and the dollar keeps going down, I will not engage in any trading. But if the dollar comes back up here in the the and the equity markets are showing strength, then I will trade the equity markets long, right? So we do have some weakness in the dollar. I'm expecting to continue, but I need a retracement for it to give me the long entry in the NQ futures. Another currency that I do like to pay attention to is the yen. This is the 30-minute chart. If you see, the yen is very sideways, but is coming to some sort of formations where you have retest and support. Here you had a breakout, a retest here, and it continued to go up and it's retesting all this area. I do expect the yen to continue to go up today, even though the yen is in a long-term downtrend. If you see here, let me shrink this chart. I know it's too fast for you. Let me know in the comments if you think this is too fast. The yen is in a long-term downtrend and today is dropping, but this area has been holding. So the normal expectations for me are that this thing might bounce from here, right? If it doesn't bounce, then we will have more strength in the equity market. So, but I will give this currency around 20 to 30% on the 20 to 30% on the weight in my trading plan. I would put like 60% on the dollar because this is a stronger currency, right? I would like to check the euro. Why I do like to check the euro? Like the dollar is more than the dollar index is 50 or 50 plus percent composed by the euro dollar currency. So this is the most important pair involved in the US dollar index. So I really want to see where the euro is going. Um, and why I do say the dollar has some pathway to the downside is because I see the euro chart with no real supply or no real resistance, sorry. And here you can notice this pivot, we didn't have a break large enough to come back, retest, and keep going. And here's the other part. There's no supply here for the euro. If we go down to the 30-minute, it's actually creating a reversal pattern on this 30-minute. So I would more expect a breakout to the upside, right? And a retest here, and a continuation to the upside. Sorry. And a continuation to the upside on the upcoming days, right? We do have Jerome Powell speaking today at 10. But yeah, the euro is showing some strength, right? All right, so let's keep going here. Let's go back to the daily chart. I want to review. We do have the currencies now. What's the third component for the my market context? And I have several components, but this is one of the mains. The bond yield or the bond charts, right? The government bonds, and in this case, a 10-year treasury bond is one of the most important assets that I use to correlate in my trading. And as you can see here, the rates are going up, meaning bonds are going down today. Not by much, it's pretty much flat. Now, here's one thing that I always correlate to my trading. And since I mostly trade the NQ futures, I I like to watch the yield, because when yields are going up, technology most of the time suffers, right? It becomes weak. Why? Because a lot of companies in the Nasdaq 100 index are either startups or companies that are money-losing companies, and they finance their operation. And if the yield goes up, their finance gets more expensive. Hence, they will have less access to um, to liquidity, right? They will have to either dilute their shares, what will be creating more weakness in the market, or have to pay more interest in loans, right? So I would pay attention to this in a daily basis. Market does not like high rates though. Now let's go to the VIX. The VIX is it broke partially this trend line, but it came back down to this demand. I do not expect this demand to hold anymore. Um, we're not even near to violate it, but if we fill this gap, we didn't have the necessary push here to create a spike. Now, I want you to pay attention to the pattern on how the VIX is traded, right? Because remember, this VIX, this index comes out of the quantity of buying puts in the market, meaning people getting afraid of a downside in the market, right? So that's the fear indicator. It's a fear gauge that Wall Street uses, right? So I want you to pay attention to this. Like the VIX usually, and this is daily chart, comes up, retraces back down, and explodes, right? Comes down, goes up, comes down, and explodes, right? He's been doing this the entire year. Comes down, retraces a little bit, comes down, explodes, right? It didn't do this here. This is a very uncertain times, but now we're in this phase of, all right. Now the difference is this drop is very steady and slow. It wasn't very uh, like sharp, if you will. Now, if you see, the sharpness most of the time in the VIX is to the upside, because when the VIX is going up is when people are really afraid. Opposite to the equity markets, when you see the NQ or the ES, the drops are the one that are very sharp, right? The upside is kind of slow and more like sideways up, right? Um, but yeah, I'm paying attention to this. If the VIX breaks 25 again, I will expect a much larger downside on the equity market. But dollar is not supporting it, yen is not supporting it, bonds sort of, right? All right, so let's go to crude oil. So crude oil is been sideways today. It's dropping off of the well, the crude oil market just opened, right? But it's dropping a little bit. It's just pretty much flat. Ended up dropping yesterday, and today we did have PCE numbers better than expected. We will review those economics news reports in a little bit in this video, right? But yeah, every time crude oil drops, we do have a better day in the markets. Is the perception of a cheaper oil is better for the economies. Hence, investors tend to be more risk on in the equity markets. Right now, with all the theme about inflation and so on. Normally, commodities are a risk on asset, right? but crude oil in particular is talking to the economy. If it drops, is better. If it goes up, it's not very good, right? I do have other commodities that I want to check, like copper. These are inflation gauges for me. Like for instance, lumber. Lumber tells me that inflation is gonna come down, right? When, I don't know, but lumbers, look, housing is a very important. It makes like 17% of the entire economy, and lumber is one of the main components for construction, right? So if lumber is going down this way from has come down around 60 to 70%, right? So let me see if I can measure this. Prediction forecast. No. Price range. There you go. From here to here. 66%. 63%. Right? So that's a pretty good information to have. All right, let's go to the equity markets. Let's go to the NQ. This is the one that I trade. Let's go to the the 1 day chart. Let's get rid of these circles. All right. I did have this demand that was somehow holding here. So the way that I got to this demand was in this pivot and the retest. So we broke this high, created this sort of demand. We retested and then we went back up. This is a very important supply though. On the ES is more geometrically, you can see it a lot better. And I'm a firm believer that the ES is the one market driving the rest of the market. But nevertheless, I do like to mark off zones in every market, right? I don't trade ES zones in NQ and so on. I was expecting yesterday a drop, but we did have this nice rally off of this retest again, so it's holding, and this is a very bullish move for me. So I am focusing every day in trading long the markets. So I think is a better way to have a bias. If you go to the daily chart and you say, all right, do I have any sort of supply nearby? And I do not. I do not have anything till like 400, right? So my main driver today is, all right, how can I get into this thing, right? Because I do have room to keep going up. If we go back down to the 30-minute chart, we can get rid of this, right? And we can find demand. And if you guys see, I do have this demand that held. This is July 29th, right? All these formations held. Let me see if I can find a 30-minute formation here. And what time was this? This was the candle open at 9:30. So this is very important area, right? And guess what? 24th, we revisit it. Do I have anything here on the opposite side? 9:30, yes, I do have this, even though I don't like it too much. Is 13,300. It coincides with this pivot, but the momentum is to the upside. So what I'm going to do, I'm not going to put a supply here. What I'm going to do is I'm going to put a line here, right? And I'm going to go back down to the 5 minutes and check what is going on the 5 minutes. And this is the multiple time frame analysis that I do every day. on my trading. So I would argue that my really my area is all this. There we go. That is around 300. We are at 200, so we still have 100 points to go up. Now, is this the best high quality supply? I don't think so. Look, I just have this pivot here. I don't have too many pivots, right? There we go. And this is not a really a like trend changing pivot like this one. All right, this one created a pivot here and started to drop very sharply. This one was it was just a pullback, right, to come back up. So this is the first high quality supply that I would have. That is not the best one. I mean high quality because it have all the requirements. It meets all the criteria that I use to mark off zones. But the location is not the best one. All right, so let's go to the ES. All right, S&P futures. Let's go to the daily chart. This is the best definition for a breakout and retest. We did have it here. This breakout, retest, run up. For those there trading options, it's not easy to catch this move because this gap is created in the pre-market. But for the futures traders, it's very easy trade to take. Right from here, it broke to the upside. There's not really a good supply right here, but here, and this is 2 days later, 2 days after the move. So this is one of breakout and retest. Then we have this second pivot, which is a very important pivot because this one created the actual low for the markets. So here we broke to the upside. Now we're testing these areas and continuing going up, right? I do expect more upside in this thing. Now, if you guys see 1, 2, 3 triple top, it was a 3, 1, 2, 3, 4, 5, 6, 7 days, 7 trading sessions here. This is a very good supply. So my supply is 42.89 3/4. The higher probability is for it to fail because of the how many times it's been there. But nevertheless, I'm gonna leave it here because my trading strategy will tell me to, if we somehow break it, come back, retest, and continue to go up. It's paradoxical because all the news and events are talking about recession and how bad is the economy, but the market is thinking otherwise. All right. Now for today on the ES. Now for you guys, I don't trade the ES. I will have to learn eventually because for the size that I want to trade, is better if I trade the ES. But if you see here, we did have what time was this? It was just 7 in the morning. So we did have this pivot. And then we came back, retest the highs from yesterday, and we are continuing. So I would think that we are going to retrace to this pivot when we start the trading session today in 20 minutes, right? Remember, so and this will be my pre-market support. Now we have Jerome Powell speaking at 10. That could blow everything up. I don't think it's gonna happen. Every time he speaks, the market goes up, and he's very careful with what he says. But yeah, I want to pay attention. Now I want to check out the weekly. We came back down. We have this rally, base rally, and we're going up. So I'm gonna say this, I don't see any downside. I don't see it, like, unless the speech of Powell today just create new sentiment. But I think I'm, by definition and technically, I am bullish. This market were designed to go up, and I think they will go up over time. Not today or not tomorrow probably, but in 20, 50 years, it'll go up. Right, so with that, I think I'll check the equity markets. It's 9:10. I would like to come back at 9:25-ish for the live trading session. All right, let's check on the news here. We did have core PCE. It came deflationary, meaning prices retraced. Prices didn't go up the month of July, and there's a lot of housing prices involved in this. This is a price consumer expanding, right? Like consumers are expending less. Personal income went up a little bit, which is good. So it went up in a faster pace than the prices, which is pretty good. Real personal consumption 0.2%, it went up. So I think consumers are still strong in this market. Retail inventory is a little bit up, which is deflationary. Trade balance a little bit down. Now, don't get fooled about the trade balance, because we have strong dollar, and we can buy more stuff with less dollars because the dollar went up in value. So I don't trust this thing when the dollar is just trending, right? If the dollar were sideways and this thing is going down, that's a yes for me. But for now, it's a no. So we do have Jerome Powell here speaking at 10. I will be live. Please come back and see my trading if you like this content. For now, I'm gonna close this streaming and see you guys all in about 15 minutes. Thank you.